Oh, big lunch. The chart's going to be big. Let's find out.
Wait. Matron, take them away.
A warm welcome to one and all. And if this is your first time here, this is the wandering Winky coming in to annoy me, and I'm the big fella that's Scruff. Shut up, you. She's not my friend at the minute, but she's trying to butter me up, and I'll tell you for why when we're in the video. But at the moment, I'm going to be looking at the DAX. Oh, Daxy. I love the DAX. And the DAX is setting up quite well. And it's setting up that well. I've already told the guys what I think of it. Here. So I'll show you. We're just getting all fired up on one thing and another. But in there, what you're about to see, I've already told these guys how I'm going to trade it and what it is that I'm looking for. And if you haven't seen this before, this is our Discord group where we all chitter and chatter all day, share ideas, and even on a morning, we log on and we have a video chat. Just so we can sort of express our worries, our sort of feeling of the day, all of that sort of thing. And it's good shared therapy. And I need therapy because she's doing my boxing. This is the worst time of the year for her. And she's on a merry mare because I've decided we're doing a scruffy meet next week. And we're having a day in Manchester where the guys are all going to get together and we'll have a few beers. And sort of, they can ask me whatever they want while they're there because it's face to face. But I've got to go one better. She wants a spa day. So the day before, I've got to go in another hotel just to keep her happy. Then she wants to go into Manchester. And what's the first words out of her mouth? Oh, I need a new dress. I can't meet them if I haven't got a new dress.
Cheeky fuckers.
Why? You've met them before.
Are you mourning again?
Aye, because you've bloody done a royal bankroll the last few weeks. We were in London. She bankrupted me. We were away the week before that. She bankrupted me. And yesterday or last week when you saw the video, I caught her when she was on there and I nearly had a heart seizure. I mean, bloody hell.
Well, you should look at your own screen, not mine.
Shut up, you. And she still hasn't put a bikini on, boys and girls.
Hello.
Yes, before you start, it is a trading channel. Yes, I do go off on a rampage. And yes, she is a pain in the ass. So, I better sort of earn some money, bet I. Right. What am I doing?
You forgot, haven't you?
Well, no, I know exactly what I'm doing.
Morning.
Well, no, you're mourning.
I'm not mourning. I'm
Yeah.
quite happy to spend
Yeah.
money.
No, you were mourning because I said you weren't going to spend any money. She kicked off, boys and girls. She did. She kicked off. She said I wasn't allowed certain things. And that's no good in this house. Because Scruffy likes a pie.
What?
Sorry, what did you think I was talking about? What did you think she was withholding? That's disgraceful.
Will you at the gym later on?
What?
The gym?
No, I've had a pint with Jim. Jim, you are kidding, right?
You agreed yesterday.
I did not.
You did.
When? No, when?
You'd only had a couple of beers.
I don't remember that. Bugger that, lark.
You're signing up this afternoon.
Yeah. Are we doing horizontal jogging?
Oh, that's disgusting.
That'll be no. Again. Bloody hell. Right, okay. See. My favourite hobby is winding Winky up. It really is. I love to make her go red. It is hilarious. Right. What else have we done in this? I also do what's called a scruffy bias, as well as putting up the video of what I'm about to do. And trust me, in those videos, it's technical. It's about the trade. It's why I'm trading it and how I'm going to trade it. On here, YouTube is kind of a hobby for me, but it's also a visual diary of what I get up to. And hopefully it'll bring a smile to your face, because it certainly brings a smile to mine. But if not, anyway, keep your comments coming, do subscribe, all that sort of thing, and hopefully you'll get some value out of this. But what's the value today? Well, the value is this. I was looking at Aussie JPY for Steph. Good salute to you. I don't see anything just yet. And I've filtered all of these down. I was looking at currencies this morning, but there's nothing really doing. And I need the markets to calm down a little bit before I enter them. But what was left was the FTSE and the DAX. Now, they're both behaving quite well. Both sells, but the DAX is the better of the two. And what it told me at midday, and it's now 20 past, and I've still got a bit of time to wait, was to sell this. And there's a good opportunity in it. That's what this sheet does. It's an equation I put together, and it spits out some criteria, and if the charts match up, then I'll look to trade it. It's not X marks the spot. It's just a heads up of what might come. So let me get rid of this just a second. And what are we looking at? Well, this is a 5-minute chart. And as you can see, it's come down. Now I'm going to strip it all down and kind of show you some key points. So everything's up. Now, if I take this back out to a 15-minute, you can see there was a gap here. Now that was on Sunday night. Okay, gap down. It tried aggressively to push up to this gap, but it failed at the gap point. Now, eventually that will try and get filled, but what it's actually showing is there's not enough strength in the market at this moment in time to fill that gap. Right, if that's the case, where's it going? How can I balance this out? Well, if it isn't going up, then it has to go down. If I put a fib onto this 15-minute, and I do like fibs, I genuinely do, I can start building up some nice areas of attraction, areas that are good to trade. So we've already just crashed through one. Now, I'll take this up into this cluster, which is here. Which is there. Right, they've given me good entry-exit points. And there's also another one here, which is the base of that. So I've now got structure to the movement based on a sell analysis that I've made. Now, we should really have an order in here, but it's not quite ready. But let's just draw an extra piece onto this, because I want to know where this can go based on that move. Well, if it's retracing up and it's not coming to the 50, it's preaching under there, we have these areas here. One there and one there. So I now have a structure in place. So is it ready to go to market? Actually, it's not a million miles away. So what I'm going to do is I'm just going to drop an order in for it to come to me just underneath. And I want it kind of on that blue line if I can get it. So I'll just put the order in and then drag it in.
Well, we're waiting.
Right, guys. There we go. Dropped an order in pretty close to that blue level. So where are we going to go with this? Well, from there into that blue line is a half decent trade. And if I'm wanting it to push down into there, it's a superb trade. So I'm more than happy with what I've put in place. Now, all the criteria that I'm after is there. Okay. I can see the drive down, this. I can also see the push up that's failed here. And then it's come back down on itself, and it is predominantly red. Okay. So if it's predominantly red, it's kind of adding weight to what I'm talking about. Now, there are certain things you can look to keep an eye on this. You can put MACDs on, you can put RSIs on. You can look at Bollinger Bands, all these different things. But the one thing that will always show you what's going on is the price. The price itself is the best indicator. So what I'm going to do is I'm just going to let it run out. I'll look to enter on these if it goes against me, and then come back, and I'll look to exit on these. Simple trade price. So what I'm going to do, I'm going to have my lunch, see if this will fire up, and away we go. Okay, guys, been stocked out. Don't need the top order anymore. Get rid of that. And it's done pretty much what I thought it would do. It's gone from area to area. And then the next area was down here. Now, this might well turn round, but do I need to go back to market? Well, the answer is no, I don't. And why is that? Because I've done enough for my salary, and that includes a fat finger trade as well, because I went to put in a sell and I clicked buy, realized what I'd done, and then killed it off. Subsequently, if I'd left it, I probably got another 30 quid. But the point what I'm making with that is, sometimes even if you make a mistake, and I make them every day, trust me, I do, but I don't let them command me. If I see it, I'll kill it, and I'll just accept that that's what's done. Likewise, when we're looking at stops and risk reward and all these different elements of trading. Now, I did a video at the weekend regarding shares, the way I'm going to start looking at shares. It's not my forte. It's not something that I like. But the difference between trading a share and trading, day trading, what you see, is actually the drawdown and the risk, or whatever you want to call it. I call it investment, because I think you should always invest into a trade, whether it's long term or short term. Now, when it's short term, under 24 hours, what you're trying to do is what I've just done there. I have my parameters in place, what I'm prepared to do. I know what my maximum risk is, but it's made on multiple trades building up into one trade. So from the outside, it looks like a wide mental stop, but it's not, because I only trade once, twice at best. What it is, it's building up multiple trades in a single position. So if you understand it, and the guys in the Discord do understand it, because it's a hard concept to get your head around, it makes common sense. But then when you're looking at swing trading, you have to have bigger investment return than what you're putting on the table, because it is that much wider. So if you put £100 at risk, if that's what you want to call it, or you invest £100, taking £10 out of that for a 10% return over time is pretty dangerous. So you need at least 1-to-1. And somebody tried to pull me up on this, and what I was driving at with that sort of ratio was, if I'm putting 100 in, I want 100 back, but then I want to see how far it'll go as well with as least pain as possible. And that's why I'll pull it into risk-free when it gets halfway there. So if it does return on me, well, it's only cost me time. And then each time I'm taking pieces off, I'm being paid for the time, but I'm still allowing it to run. Whereas on a day trade, as we're looking at here, I'm kind of doing it the other way around. I'm taking most of it out and leaving a little bit to run. It's two different concepts. And in trading is probably the most divisive career there is. You know, you can have two mechanics and both apply themselves round about the same way, but they can have little shortcuts through experience, etc. But they're kind of doing the same thing. In trading, you can have a buyer and a seller looking at the same asset on the same day and both be right. So how can that be? Well, the market works in waves, and it's the waves we're trying to capitalize on. Now, I might catch the first wave moving up, the other guy might catch the second wave moving down. So we were both right. But because you have two different ways of looking at it, causes conflict. And those who shout the loudest are normally the ones who haven't got a clue what they're talking about, because they lose. And then because they lose, they pick fault with it. No, none of us is wrong. None of us is right. We just are. Are we ready at this moment in time? And are we happy with the trade we're about to take individually? That's why I never preach do it my way or anything like that, what some of the gurus do and things like that. I just show you what I do. And these are the circumstances that are right for me at the time of entering. Now, one of the reasons that I tell the guys in the Discord group before I'm doing the trade is it's very difficult to predict something in advance, but it's very easy to predict something after the event. That's why I won't use rollback charts. You know, what you see is what you get. And when I'm on the screen, yeah, I've got a fair idea what I'm looking at. I've got a fair idea what I want. But do I know exactly where it's going? No, I don't. That's why I carve and I manipulate and I change, because I'm in the moment. I have the emotional context to deal with. All of these different things. If that was trading view, and what I will say is, you see anybody that's trading with trading view, pay very close attention to the date and the time, because I'll guarantee they know the outcome before they're pressing the button. I can't do it with the systems that I use, because I use MT5 and a web trader in the moment. And I back that up by telling the guys before I've done it. That is the difference. That's my sort of point of difference, shall we call it, you know. Anyway, enough of that. Good trade, hit my wages, don't need to go to market anymore, and I'll do it again tomorrow. And that's the other side of trading. I'm never greedy, I never chase the market, and I never overtrade. 3 elements that keep me safe. And then I'm going to touch on a 4th one just before I go, because I have had this discussion today. Your position size has to be in relation to your asset size, your account. If you've got a small account and you're putting on a big position, you're putting too much stress on it. And eventually that'll break. If you've got a big account and you put a £5 or a point on, who cares? You know, I can take £25, £30 a point on my account quite easily without it damaging it too much. But I go nowhere near my tolerances, not even close to them, because the account is big enough to take it. But it's not an account that was built in a year or in a month. It took years to build it up to that level. And now I don't trade for growth anymore. I just trade for income, and anything over and above it just keeps topping that account up. And I skim it off at the end of the month as a bonus. And then half of it's mine, half of it's in a slush fund for the account or the business, because it is a business we're running. And if I do hit a tolerance and it's cost me £2,000 in a day, or it's cost me £1,000 in a day, I can take the £1,000 out the slush fund and put it back in my account, and there's very little damage done. It takes money to make money. And if you think you're going to do it off £200, I'd love to see the results. I genuinely would, because I can't do it. You know, I'll rephrase that, because I did build my accounts up from under £1,000 many years ago. What I'm saying is I can't do it in the time scales they talk about. I saw a guy the other week saying if you had £200, you'll be on £20,000 to £30,000 a month within 3 months. Good luck with that one. You know, and it's quite prominent on YouTube as well. Anyway, enough of that. I've had a great day today. Winky's been winding me up like there's no tomorrow. She's all excited because Christmas is coming. She's all excited because we're going away at the weekend again. We're having another jolly. And why not? Why not indeed? It's what we're here for. And then we're going to have a jolly with the Scruffs next week in Manchester. So that's another thing to look forward to. And then I'm pretty much going to be shutting down, getting ready for Christmas, because I'm going to take an extended break at Christmas. Have a couple of weeks off. And then start it all again in January for the new year. How's that? So if you enjoyed these videos, do subscribe. It does encourage me to do more. If you want to talk about it, I'm easy found. You find all my contact details in the description below, plus plenty of other links like my preferred broker, BlackBull, etc., down into my preferred prop fund, which is the 5%ers, and then obviously the Scruffy Squad. So as always, guys, trade well, keep your risk managed, but above all, do what you love and the money will follow. See you all in the next one.